How many recognize the fact that 98% of the people who trade lose money? Everybody. Now, if that is the case, and those are the facts, it would stand to reason that those people are doing something wrong. Those of you that have heard me or seen me speak before know that I wasn't always a very good trader. In fact, when I first started trading, I was probably the worst trader that I could ever imagine to be. Why? Well, because I just didn't really know what I was doing. And in spite of the fact that I went to all of these seminars and took all of these courses and studied all these books, I still didn't know what I was doing because I didn't realize that what I was learning was not really designed for me to be successful.
But unlike almost any other profession, we so haphazardly get involved in this business without really knowing what we're doing. Without proper education, proper skill. Why is that? Because trading seems so easy and simple. There's only two things that can happen. The market goes either up or down. Nothing else. Simple, right? I thought it was simple. And theoretically, it is. So, unfortunately, most people who get in fail miserably because they are misinformed about the realities of today's financial industry. Misinformed. I know I was naive. When I first got in, I was naive. Well, why? Well, let's think about this. In spite of whatever you've been told, whatever course or training you paid for, every transaction, every financial transaction has two parties involved. Whether you buy or sell, on the other side of that transaction, there has to be someone, correct? And when the transaction is done, at the end, when you close the deal, there will be no ifs, ands, or buts about it. There will be a loser and there will be a winner. Every single financial transaction in the world has a loser and has a winner. It doesn't work any other way. So why do I say that you're insane? Because here you are. What makes you think that you will be able to take money from the most successful, most corrupt, and the richest Wall Street fat cats that control this whole thing? Do you really believe that they'll let you take their money? Here you are hoping that you will. But think about it. This is the cruel reality of what happens out there. Now, we have to go back and find out what you know about the industry, what you know about trading. Where is your education from? Your training? How did you acquire it? Where did it come from? Where is its origin? Who taught you? Who prepared you for this? Think about it. Was it Warren Buffett? Stephen Cohen? Did you go take some courses with Goldman Sachs? How did you come about this education that you're applying, and for the most part not so successfully, because if you were successful, the chances are you wouldn't be here? True? Right? Where did it come from? Now, is it possible that if you've been getting the wrong results, you may have to accept the fact that much of the information you've received has been false or misleading? Can we at least accept that possibility? Right? So, now, to prove my point, you can go to any bookstore and pick up this little book by one of the most successful investors of all time, George Soros. And the reason why I pick him is because he's very good trading foreign currencies. And I love foreign currencies. But we don't have to dispute the fact that he really knows what he's talking about. Well, here's what he says in his book. One cannot escape the conclusion that both the financial authorities and market participants harbor fundamental misconceptions about the way financial markets function. Think about it. These misconceptions have manifested themselves not only in a failure to understand what is going on, they have given rise to the excesses which are the root of the current market turmoil. He goes on and says, I shall argue that global financial system has been built on false premises. Emphasis added. This would be a shocking proposition, except for even more shocking proposition that misconceptions characterize not only financial markets, but all human constructs. What does it mean? What does it mean?
We don't know at all.
You don't have a clue. That's what it means. But read between the lines. What it means that every time we turn around, we are lied to. Because someone has a hidden agenda. You know, it blows my mind when I listen to CNBC and the market's going up and up and up and up. And those CNBC people are just so disappointed that the average retail trader, retail consumer, retail customer hasn't really been fully invested or is not fully in yet. When is the dumb money coming in? They're asking. That's what you are, dumb money. All right? So, and I learned this the hard way. You know, what I'm telling you is something that nobody told me. I had to find out the hard way. When I first started trading Forex, which was a little over 10 years ago, it wasn't the first time I started trading foreign currencies. I had traded before. probably another 10 years. But I did not consider that trading because I, like most of you and most amateur traders, market was going up, I was buying. So I wasn't really trading, I was buying. And then when the bottom fell out, I lost it all. So when I really started trading for the first time, I considered myself the worst trader in the world. Why was I the worst trader? Well, looking back, in hindsight, I know where I was making the mistakes. But one of the basic things I did not understand, and that was the fact that someone has a vested interest in my losing money. Someone has a vested interest in you losing money. Remember that transaction? You either win or you lose.
So I was doing something, believing I was doing things right, but all along I was doing things wrong. Now, in order for me to become successful, I had to go through a lot of failures, and I'm talking blowing out several accounts. That means go from a pile of money to nothing. How many of you can I get to? Well, so and I kept, but for the longest time, I kept doing the same thing over and over and over because I believed that what I had learned was the right thing to do. And I couldn't figure it out, what am I doing wrong? Has any of this ever happened to you? Those of you who have traded. Now, you're trading, putting on a trade, you do everything you're supposed to, you've got your price target, your profit target, you put your stop loss just in case the market goes against you, and almost every time you get stopped out 2, 3 ticks, 5, 10 ticks before the actual market reverses and goes back in your direction. Right? Very frustrating. Used to happen to me all the time. 90% of the time I'd be stopped out. Here's another one. I'm targeting a profit. But the market reversed like 2 pips away from my profit. Or from my target and went the other direction. Or, how about this one? You're slightly in profit. It looks like the market is reversing. Guess what? You take the profit. Then the market turns around and whammo, runs like crazy in your direction. Has that happened to anyone? Right? How about this one? You're looking at your charts for 45 minutes, lining everything up, and the second you enter the trade, the market reverses, goes the other direction, right? Why does this happen? It seemed to me, for the longest time, that the whole world was trading against me. There was only one trader in the world, that was me, and everybody was, the market was moving against me. Right? How about this one? I usually made a profit when I pressed buy instead of sell, or sell instead of buy. That's how I make profit. Yeah, this used to be me. How about close? A losing trade find out that we'd be in profit a couple of hours later. Didn't even wait for the stop to get filled, and you'd think, oh man, this market is reversing. I'd better take my loss now, right? And then 2 hours later, you would have made 50 pips, 100 pips. How about you're in profit and you're thinking, man, this market's got a long way to go. And a perfectly good trade turns into a loss. That is the most frustrating. It doesn't, you know, when I get stopped out and take a loss, it doesn't bother me as much as when I have a profit and that profit turns into a loss. You know? How about the procrastination, thinking about, well, I really think people do just, you know, they rationalize, okay, let's see if this market will move a little more in my direction, and whether it is on opening the trade or closing the trade. Got a solid trading signal, but procrastinated and rationalized about it until you completely miss that opportunity. On both sides, opening or closing the trade. Right? Have you done that? Yeah. Do you know why people do that? Because they have lost faith in their own trading strategy. They have lost confidence in their own trading strategy. They don't trust it anymore. Do you know why people don't trust it anymore? Because of all of these things here. So you're thinking you're doing everything right, but the results are not showing you. Right? So, and what happens when you keep doing the same thing over and over and over again, expecting a different result? Right? So we need to, by just sheer common sense, we have to do something different, because whatever has been done ain't working. I started discovering that not everything I learned was really the truth. Now, the financial markets are simple in the way they work, but they are not simple in the way they are being controlled. It is not in the best interest of those who control them for you to make money. It is, however, in their best interest for you to bring money to the market and give it to them. Right? So we have to keep that in mind, and when you kind of go back and reflect on where you first learned how to trade, who taught you, who gave you the information, what was the source of that information, then you'll put the pieces of the puzzle together and you'll understand how this whole thing works. But mere mortals like you and me, we are not supposed to be making money in the financial markets. We are supposed to bring our money to the financial markets and leave it there. Right? Every trade, every transaction has two parties. A buyer and a seller. Seller and a buyer. One of them will be a loser and the other one will be a winner. And many times, particularly in a new marketplace like the foreign currency, like the retail foreign currency market, sometimes, and sometimes more often than not, even your broker is not your very best friend. Particularly one that takes the opposite side of your trade.
Well, I finally came to realize that, number one, I wasn't alone. Number two, there was a reason for all of this. And everything I knew about trading I had to forget, start from scratch, and I became successful only after I realized that whatever I knew I learned, the traditional way of trading, was either false, misleading, or just a downright lie. And I venture to guess that the same thing is probably going on with you. So it'll be an easy fix. That's the good news. All right? So this whole thing, I mean, I don't think I have enough time, but I could go into just a detailed explanation how this thing happened. But bottom line, because of an accidental trade, my luck, if you will, changed, and I started trading in a way that is contrary or contradictory to the traditional trading wisdom, to the traditional teaching. Because when we think about it, where did our teaching come from? We as amateurs, where did we learn to trade? Who taught us? The pros. Really? I'll tell you, I'll submit this to you. The most successful traders don't give their secrets away. You don't have Stephen Cohen going around and teaching people how to trade. You don't have Warren Buffett or George Soros going around teaching, giving their secrets away, teaching you how they do it. People from Goldman Sachs, they don't do it. People that teach usually charge you to teach you, when ironically they themselves probably don't have a clue. They are only regurgitating something that they read somewhere. That's it. And I don't want to offend anyone, but it is the truth. And you need to accept it, or else you will continue doing the same thing you've been doing, and guess what? You will not be getting different results. Same results. So, I discovered the three biggest, what changed my life really as a trader was discovering the three biggest lies in trading. Would you like to know what they are?
Oh, yes.
I thought you might. Okay, what's the first lie?
Basically, when I started rationalizing and started thinking about all these things, I discovered the three biggest lies in trading. As I call it. The first one, and this is what I was taught in every course and every book about trading I read, say, never, ever, 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 ever trade without a stop loss. Well, guess what? I followed that rule, and the only thing I got were losses. Again, let's think what's happening over here. You buy, somebody sells. Somebody's on the other side of that transaction. At the end of that transaction, somebody will be a winner, somebody will be a loser. Now, if the broker is on the other side of that transaction, he's trading against you. If your broker is trading against you, do you think he wants you to win, or do you think he wants to win himself? Right? So here's how it works. Here's how these stop losses started being popular. Well, if a trade goes against you, then you'd better take a little loss rather than losing your entire account. Right? That sounds a lot better, taking a small loss as opposed to taking a big loss. Right? Sounds more palatable too. Plus, imagine this, and this happens all the time, or has happened. You get all excited, start trading. 2 days later, you wipe out your entire account. You're going to be upset at somebody, right? Maybe your broker, right? You'll want to sue everybody in sight. Well, that's not necessarily what the brokers want you to do. But if they condition you to be a really, really, really bad loser, where you lose just a little bit at a time, and it takes you 3 months or 6 months to lose your account, well, by that time you've convinced yourself, I'm such a bad trader, that's just the way it is, right? So take a little loss, and that's how we're going to avoid the big losses. But the problem with the little loss is that if you take 100 of those little losses, then it's almost like having one big one, right? And I honestly have not met a single Forex trader who trades with stop losses and makes money. I have never met one, ever. So I discovered the first time I really started making money in Forex, it was 20 years ago now, but when I actually forgot to put a stop loss on my trade. Every time I did it, I lost money, even if the market went in my direction. So, here's the first.
Because markets are volatile. They're noisy. They go up and down, even inside a trend. And what else do they tell you besides never ever trade without a stop loss? What's even better than a stop loss? It is a tight stop loss, isn't it? It's funny, isn't it? When you think about it. Well, imagine this. Think about this. Someone is on the other side of that transaction. Someone put this information out. So they'll take it one little tiny stop loss after another stop loss. One stop loss at a time. That's it. And, well, you're just not a very good trader now, are you? You're just terrible with picking out the direction of the market. You get stopped out all the time. Do you think that when Warren Buffett takes a $5 billion position in Bank of America, he's thinking, oh boy, we'd better put a real tight stop loss to this trade? Do you really think so? Do you really think that when Goldman Sachs takes a $5 billion position in oil, or whatever it might be, that they're thinking, well, we'd better find where we're going to put the stop loss, maybe right down here below this last low? You really think that's the way they trade? You are more insane than I thought you were if you think that. They don't use stop losses. No big traders, successful traders, use stop losses because it is more risky than the trade itself. You might as well hand over your money. They will come and grab your stop losses. It's a scheme to take your money, ladies and gentlemen.
Lie. That actually, when I recognized it, this was the breaking point in my trading career when I actually started making money. Eliminating stop losses altogether, and I started making money. but it goes beyond that. Now, people tell you that the market is always right. Well, who says that? Who says that the market is always right? I say the market is never right. Market is never right. See, if the market is always right, then somebody would have to be always wrong, and that would be generally you. If the market is right, you're going to be wrong. So you're wrong, you lose, okay, that's it. End of story. But I say that the market is never right. Now, the supermarket is right. When you go to the supermarket and you want to buy a gallon of milk, you know what the price is. It will be, I don't know, $3. And it will be $3 today and tomorrow and the day after, and maybe in a couple of years because of inflation, it will be $3.15, whatever. But the market is never right because it searches non-stop looking for the right price. If it was right, it would know what the dollar-yen was worth, and it would be at that point all the time, wouldn't it? But the fact that the market is never right is actually a good thing because that creates the volatility and we need that in order to make money. So you need to also realize that, you know, those people that say that history repeats itself, that's BS. I could never find in all of my analysis of financial markets and charts, I never found a single reason why certain markets would, or why history would repeat itself. There is no such thing in the financial market that history repeats itself. Anything that happens in the market is purely random and coincidental.
The history repeats itself. What a crock of history repeats itself. Like which history exactly? And how is it supposed to be repeating itself? With the different figures in the market. Like the double tops and the pen and handle and the head and shoulders. What kind of crock is this? Seriously though. It has nothing to do with the price of tea in China. Nothing, absolutely nothing. People are trying to beat the market. And everybody thinks they found the Holy Grail. And they invent things because it just happened to work out coincidentally a few times. How do you know a head and shoulders formed? How do you know it? You know it with the benefit of hindsight. You know it when it has formed. Not before, after. How do you know a double top form? How do you know a resistance held? Well, sometimes it holds, sometimes it doesn't. How does the history repeat itself? You might as well be tossing a coin. Don't believe in any of that. Because that only goes to prove that you're a bad trader. Sometimes it paints out, other times it doesn't. And you only know after the fact. How does it help you after the fact? It's like closing the door on a barn after the horse is already ran away. You're guessing at that point. You're guessing. Never guess.
Here's an important thing. one of the biggest mistakes why people sometimes have no other option but to take a loss. And that's the fact that they put on too big of a trade or a lot larger of a trade than they really should. And the nature of the leverage and the fact that you can control a $1,000 trade with what? I'm sorry? $20, right? You can control a $100,000 trade with $2,000, right? So people with a $10,000 account, they're thinking, I can trade a lot more because I have the capital to open the trade. I don't go on might or could or should or the market is crazy. The market is crazy 90% of the time. It's irrational. And one thing to remember is that the market has the ability to be irrational a lot longer than your trading account can handle if you're not disciplined, right? So I don't do any guessing. My mother calls me a gambler because she doesn't understand this. But I'm the last from a gambler. Last thing from a gambler. You will not see me walk into a casino and spend 5 cents on a game of chance. I would be shaking like this. I'm not a gambler. I play my odds, and this is just simply statistics and knowing what to do if things go against you.
Because I have friends that are traders, and they talk themselves out of a trade, and they try to beat the system, always improve, thinking that they're better than the system itself. And then what ends up happening is that they deviate from the system, then they get themselves in positions that they didn't really want to be in the first place, and it's just they create chaos for themselves. If you're trading manually, keep your worst enemy, which is your own emotions, in check. Never fall in love with any one trade that you place. Be prepared to get out at any time. Never ever fight the trend. Always try to trade in the direction of the trend. The market always does what it wants, not what you want. Do not listen to anyone, please. The worst thing you can do is pollute your mind with beliefs that the market's going to go in one direction. It usually will go in the other direction. It will cost you. I'm speaking from experience here.
One thing that is true that you hear all the time is that the trend is your friend. The financial markets have a tendency to trend. You've heard that, right? Markets trend. When there's a tendency for the market to go up, as more and more people notice that tendency, even more people jump on the bandwagon. And this is particularly true in the stock markets. If you watch the stock markets, which direction the stock market has been going the last couple of years? Just in one direction, up, 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 up. Because more and more people are noticing it, so more and more people don't want to miss the opportunity. Now, that is a good thing because we will be using the trending aspect of the markets to get in at a very favorable point.
You know what matters? There is only one thing that matters. At the end of the day, what is the one thing that matters? Price. That's the only thing that matters. Nothing else. So, the only thing I use is exponential moving average. to identify the trend. You know why? Because I'm not very good with charts. But when I look at a line, I can tell whether it's going up or going down. And generally speaking, when the market's going up, the EMA or moving average is going up with it. When it's going down, it's going down. You never have a market that is going down, yet its exponential moving or simple moving average is going the opposite direction. Doesn't happen like that. Mathematically, it cannot. Impossible. All I do is use moving average because I want to know which way the market's going. Remember, only one thing happens. One thing matters. Price. Is the market going up or is it going down? Nothing else matters. Price matters. CNBC doesn't matter. Remember, when you watch CNBC, there is someone who's talking who has an agenda. There's a reason why they're saying what they're saying. They are probably in some trades and they don't want to be on the losing end. Every time you make a trade, keep that in mind. Someone is on the other side and they don't want you to win. That's what you keep in mind. Nothing else. No pennants. No pylons. Cup and handle. Crazy. All right, and I use MACD because it's a combination of moving averages. I like that. And I use CCI because that's a good indicator. And that's it. I don't use anything else. Nothing else. Nothing else. Then I learned how to identify a trend. I'll show you how to do that. And remember, only price matters. Forget news. Logic doesn't apply. How does this make any sense? Apple, APL. Last quarter made more money than Amazon.
And Exxon.
Amazon in its entire history. In one quarter, Apple made more money than Amazon in its entire history. Why is it that the P of Apple is like 7 or 8 right now, and Amazon is like 3,000? How does that logically make any sense? Right? So logic doesn't matter. Fundamentals, you think fundamentals really matter? Fundamentals, well, we're going to print money, and so the currency will go down. I mean, those are fundamentals. I mean, you can take that to the bank, but other than that, I can't think of anything else. So it doesn't matter. You know why it doesn't matter? Because the computers and the computer algorithms have taken over trading. Logic, no, doesn't matter. Trend, yeah, there's still the mass euphoria when something goes up. People still want to get in for a while.
Every strategy has to have 3 components. First, we need to find a place to enter the market. Right? Trade entry. 2, we have to know when to get out. Knowing when to get in, when to get out. But get out with a profit. I call it profit taking. But more importantly than any of these is trade recovery. And trade recovery, we're going to be focusing on this quite a bit, simply because trade recovery is what makes the difference between those people or those traders that make money and those that just simply lose money. I have never met a trader who makes money that doesn't use some type of trade recovery. Now, a trading strategy is basically a set of rules that are set in stone, that are duplicable and repeatable every time you enter the market. And it has to be the same set of rules that you repeat over and over and over and over. You can never deviate from a strategy, because if you do deviate from a strategy, what happens is that you start managing chaos. Right? So when you set up a strategy to trade, and again, I have never met a successful trader who trades without a strategy. There is just no such thing. If you're going to trade, you have to have a strategy, and that strategy has to have all of these three components. Most people have a strategy, but it only has the first and the second component. Instead of trade recovery, they have some type of acceptance of a loss. Right? Now, if you make a stop loss part of your trading strategy, realizing what a strategy is, you will be taking a loss over and over and over and over. Therefore, you need to, from any trading strategy, eliminate taking a loss. Instead of taking a loss, you will need to recover from that loss. And that's why we call it trade recovery. Right? So the idea is, here's how I look at trading. I do not want to put any more than 10% of my capital in all of my trades. In all of them, 10% of my capital that is available, I do not want to have any more tied up in margin. So that being the case, if I have, let's just take $10,000 for an example. I do not want to have any more than $1,000 of that $10,000 tied up in trades. Right? But if I know that the $1,000 is the most I'm going to allow myself to put into a position, I will not start putting in $1,000 right away. I'll split that in 5 parts. 1, 2, 3, 4, 5. And my first entry will be only for 1/5 of what I think my maximum should be. Now, why would I do that?
We set a rule: when you first open a trade, only open 1/5 of it than you normally would. You still have 4/5 or 4 of those segments available for your trade recovery. Because the trend is not going to change on a dime on you. The chances are that 9 out of 10 times that you're dealing with a retracement. So when the retracement is done and the trade or the trend is still intact, you may enter back in with the second part of your, with your second fifth of your position. Right?
Well, I'm kind of, setting myself up for a good trade, but I always assume the worst. I always assume I'm going to be wrong this time, and the market's going to go against me. Well, when the market is going to go, and I'll give you an example. Let's suppose that I entered the market here, right? On this bar. After market right now, it's retracing a little bit. Now I get a clear signal, green bar. My MACD still is confirming the uptrend. And guess what? Well, market drops off. Right? And I've got all of my chips on the table. Then what do I do now? Typically what people do, they pray. That's what people do, they pray. And if praying doesn't work, then they have no choice but they gotta get out with a loss. Right? But the markets oscillate. They go up and down and up and down. And guess what? I was wrong here. But here's another opportunity again. If I have capital left, I will improve my cost basis and enter again here. So I'll add to my position, and now my loss on the aggregate position that I have is a lot less in terms of pips than it was when I first entered, because I'm dollar cost averaging, right? So what if I'm wrong again? Guess what? I can go in third time, and I still have margin left. On the third opportunity, guess what? This would have been a clear winner.
You need to keep in mind is that the strategy can never change. You don't want to ever deviate from it. Every system has to be repeatable 100% of the time the same way over and over again, or else it's chaos. You have to have rules and always stick to them. And not every trade will work out. But if you stick to the rules, you'll know how to get out of the bad trade. Most people lose money trading because they get stopped out. They take way too many losses. They get stopped out on both sides. And they quite simply don't know how to get out of a bad trade. They don't really have any bad trade recovery management or experience, right? So what we want to do, we want to create a strategy that no matter how bad our trade is, we always get out with a profit. It doesn't matter how bad our entry is, because sooner or later, we'll have bad entries. And if the market goes against us, what do? See, it is not your ability to manage good trades that makes you a good trader. It is your ability to manage your bad ones. That's what makes you an excellent trader.
How many recognize the fact that 98% of the people who trade lose money? Everybody. Now, if that is the case, and those are the facts, it would stand to reason that those people are doing something wrong.